Greetings, members, one and all of the Salivation Nation. This metal did worse than silver in 2021. Let's explore. You may remember I posted a video some time ago that silver was poised to be the worst performing asset or commodity in 2021. Well, there's another metal that has beat it. According to this article here, shared with me by a member of the community from mining.com, Palladium is now the worst performing metal from 2021, and they are predicting that it is poised for a rebound in 2022. Originally from Bloomberg News. Let's talk a little bit about this. It has an eventful year, Palladium has had. It surged to a record in May before plunging to the point where it's poised to be the worst performing major commodity of 2021. But the prospects for next year look a bit brighter. The silvery white metal, around 85% of which is used in pollution-reducing catalytic converters and gasoline engines, have been rising since mid-2018 on auto demand and supply constraints. The rally went into reverse this year as the global chip shortage crimped consumption, and technological advances also made it easier to use much cheaper platinum in the converters. In other words, we are starting to see what I talked about since about 2020, that there has been this conversion into platinum because platinum has been so cheap. And now it's finally getting to the point where palladium got so expensive that that conversion has started. That's seen palladium's plummet 25% in 2021, in stark contrast to robust gains across most of the commodities complex. In fact, we've seen a widening between bid and spot price, and for a while we saw palladium in the bid price trade lower than gold. It hasn't happened for a little while here. Only iron ore hit by China's property market crisis and silver have come close in terms of losses. Well, that's something. China's property market crisis is what has hit silver or iron ore, and silver, I think, is part of due to the global chip shortage, consumption, and supply chain issues. So the demand for silver hasn't been as much, but we can see the winners and losers from this chart. What tells us, pretty interesting, coffee is at the top of the list. And for those of you who join my live streams, you know how much I contribute to the coffee market. Yes, indeed. So it's up this year pretty heavily. Natural gas and Brent oil, it's not surprising to see those up. Now remember, it wasn't that long ago, last year, when we saw oil trade at negative $38 a barrel. I remember that very vividly. Crazy. Now look where it's at. Sugar is up this year, and gold is only slightly down. But silver's down, and iron ore took a hit, with palladium being the worst performer, at least as of the recording, or at least as of the publication of this article, which was a few days ago. There are better days coming soon for palladium as Chinese purchases pick up and supply chain problems eventually ease, according to Nikos Kavalis, managing director at Metals Focus. We therefore expect a big rebound in demand, which should also be augmented by stock replenishment in China after a year of extremely low imports, he said. The market will move back into deficit in the second half of next year, driving prices up. So we very well could see. Palladium is a very rare precious metal. It is about 15 times rarer than platinum, and platinum is about 15 to 20 times rarer than gold. We'll see. A rebound in auto production should create upside in palladium in 2022. Morgan Stanley said in a note this month, the bank sees the metal averaging $2,100 an ounce next year, compared with the current spot market price of about $1,830. Not everyone is so positive, however. Hedge funds' net short positions are the most bearish ever in data from the Commodity Futures Trading Commission. that goes to 2009. Omicron is also threatening the auto market recovery and raising questions around mobility and economic growth, said Suki Cooper, an analyst at Standard Chartered Bank plc. Tactical positioning has been short Palladium since mid-September, and further auto demand downgrades have likely added to the near-term bearish sentiment, she said. Beyond that, though, pent-up demand will likely materialize as supply chains recover, which should drive upward momentum in the second half, Cooper said. Notwithstanding, that does not include any talk about potential geopolitical stresses, because there's only a couple places where palladium is mined, and that's in Russia and in South Africa. And, it's not as politically stable as other mining sectors of the world. And when you think about the diversity of the mining sector for gold and silver, and to some extent platinum, but platinum kind of really would fall in the same regard as well too. So we'll see here what that happens there. But anyways, the palladium is facing some structural headwinds. Platinum substitution, which is expected to accelerate further out the rise of electric vehicles, will gradually erode its main source of demand. That's reflected in Morgan Stanley's forecast, which see palladium at $18.50 an ounce in 2023, and then dropping to $1,210 an ounce over the longer term. I've always thought that palladium was a bit overvalued, but we'll see how it plays out. The market may have already taken into account many of these factors, said James Steele, chief precious metal analyst at HSBC Securities. It's very true. The price recovery will probably be more weighted towards the second half of the year, as the problems that were generated by the chip shortage will likely be resolved by the end of next year, he said. Fundamentally, the market belongs more than 2,000 than below it. Spot palladium rose 2.1% to 1834, and that was when this article was written. As of the recording of this video, it is actually now above $2,000 for the ask price. But it's made somewhat of a recovery here as we record this video. But nonetheless, it's interesting to see where things are going with palladium. Palladium is what I refer to as a fringe precious metal, and not many people, quote, invest in it or stack it or hold it. I have a little bit of it, but it's basically as part of collections and the like. And some of it, most of it, I bought when it was very, very cheap. In fact, when it was at its low, I think I bought some when it was trading around $167 an ounce, and probably purchased them for well over $200, $300 an ounce for the bars that I bought in some rounds, but some other pieces too in the course of time. Palladium, very interesting metal, very rare, not quite as dense as platinum. I think I still like platinum better. It's the densest of the precious metals that are traded. But in the end, really, if you want to stack and hedge and diversify, the best thing to do for that, for wealth preservation, is gold and silver. Not many venture out into platinum or palladium, especially palladium. Definitely not rhodium, which is another platinum group metal that's very rare and much more difficult to liquidate. Palladium can be liquidated, but it is more difficult, and not many local coin shops will take it back. And you probably would have to sell it to a larger broker or to one of the major online bullion dealers out there. Fascinating metal, though, very interesting, but it is very volatile, as noted from the article here. And I think that if you want to stay safe and stable with your precious metals, best thing to do is stick with gold especially, but even silver to a degree too. But you must always be open that there will be some volatility, and realize that when you stack, especially when you stack the physical, you stack it and hold it for the long term. It's about long-term wealth preservation. It's a lot riskier with metals like platinum, palladium, and especially rhodium. So there you have it. Let me know what your thoughts are about this article, about this story. Thanks again to the individual who sent me this information, and I want to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate it. That means press that thumbs up button, share it, comment, and subscribe.